So if you have a credit card, then what is going on right now is going to impact you. And I want to explain the warning that Capital One is giving us. Because Capital One is saying that credit card delinquencies are close to a multi-year high as the job market faces material worsening. That's what Capital One is saying. Now, why would Capital One say this when just this past week we got other reports saying something completely different? Well, I want to explain that in just a second, but all I ask is if you can spend 2 seconds, go ahead, hit that like button, and let's continue. So here's what we do know. Credit cards are now becoming a problem. But why are they becoming a problem for the American people? What are we doing wrong? Well, according to the jobs report that came out just the other day, we are now seeing an additional 253,000 jobs. That should mean more people are able to pay off that plastic, right? Unemployment remains the same. We also saw the average hourly earnings. It went up by 0.5% month over month. That means a 6% annualized wage increase. That shows signs of growth and positivity, not delinquencies in our plastic, right? In our credit cards. Well, not quite. According to the CEO of Capital One, he says that the delinquency rate for customers at least 30 days late on payments, this rose by 58%. 58%. Yeah, it is now sitting at 3.66%. How crazy is that? 3.66% of customers are at least 30 days late. Now, granted, that's not 50%. That's not 75%, so at least they're getting the majority of their money. But this is also the highest level we have seen since March of 2019. All right, March of 2019. That means we blew through all the stimulus. We blew through all the additional funding. We are now struggling because we still have high inflation. That's the problem. Now, he also stated that charge-offs, and this is something that I talked about in the past, that some banks, some lenders will actually charge off these accounts. And a charge-off simply means they don't believe that the person that is responsible for that account is going to be able to make payments, so they charge it off, right? Just get rid of it. Well, according to the Capital One CEO, he says that charge-offs have actually not caught up to delinquencies just yet, but he also acknowledged that this is likely going to return to 2019 levels, and when it does, well, it's going to happen towards the middle of this year. I'm shooting this video, it is May 6th. That's pretty close to the middle. So what he's saying is now delinquencies are close. We are very close to that right now. Again, we're not seeing it, but it's getting close. But what would this mean? Well, at this time, Capital One technically isn't counting these charge-offs as losses, right? It's still an unrealized loss, or it could be a gain if people actually make the payments. But once these are taken off the books, they're charged off, then these will be counted as realized losses. And this is going to completely change the way lenders issue credit. Now, what we know is that when inflation doesn't come down as quickly as many would like or we want, this tends to send delinquency rates even higher. That's what we are expecting. Now, I don't want you to worry about your credit cards right now. Don't need you to go and check Capital One or Bank of America or whatever. Okay? What I need you to understand is that your credit card rates are going to increase within the next couple of months. Because what we know is that when the Fed raises rates, we tend to see all credit card interest rates rise about 1 to 2 months later. So because of this, and the Fed just came out this week and they raised rates, you should expect your credit card interest payments or your credit card interest to go up, which means your payments will increase as well. Now, this is in part what causes delinquencies, because when the higher your payments are, this usually means the less you can pay each month on other things. This means the less you can put on those cards, because you still have to keep paying them. Your cards actually become too expensive, so you must decide, do you pay on your Capital One or your Citi or your American Express? Do you let one become delinquent so that you can pay for medication and food and pay for your rent? Well, as you may have already guessed, this creates a never-ending cycle. This creates additional chaos for your budget. This is part of the problem. Now, just give you an idea how much revolving credit has increased. According to a report in March, the revolving credit outstanding rose by $17.6 billion in 1 month in March. This now means this is the most consumer borrowing we have seen in the past 4 months. Again, what is today's date? Today's date is May 6th. It's 5/6/2023. 4 months ago, 4 months ago, we were sitting in January. 4 months ago. Here's the problem. When we were in January, guess what? Right? Guess what the issue was there? We were still spending money on the holiday stuff. Right? We weren't seeing, inflation has come down since then. We have seen interest rates go up since then. But now there's a real possibility of a recession. This is troubling because now we are in a real pickle because we're getting very close to recession. However, we now have the outstanding revolving credit is higher, $17.6 billion higher just in March. Yeah, let that sink in. Think about that for a second. This is going to cripple the economy. As credit card delinquencies spike, creditors are going to tighten. They are not going to issue so much credit. You want to go buy a new car? Guess what? It's going to be tougher. You want to go and finance a vacation? Guess what? It's going to be tougher. You want to go and just consolidate your credit cards? Guess what? And if you already said it's going to be tougher, you're right. This is the problem. Right now, credit, is starting to shrink. We are seeing credit tighten. We are in a credit crunch. And I told you this before. I said it was coming. I told you that we knew it was going to happen. It was just a matter of when. Well, based off the statements from some of these banks, from other creditors, what we now know is they're expecting things to get worse. They're expecting more pain. And when we see more pain, guess what? That's probably not just pain to your wallet. That's pain because you're not being able to eat. You can't afford food, can't afford your rent, can't afford your car payment. Your credit report gets hit, it goes down. Your credit score is now starting to suffer. You want to go get a loan in 3 months or 6 months or in a year? Guess what? It's going to be tougher as well. That's the situation that we're currently in. And the whole reason why I bring this up is because the majority of people that I talk to and I ask, how are you doing? They all say, things are okay. Things are fine. It's tough in, certain times of the month. But the majority of people that I ask tell me the same thing. I'm only able to get by because of my credit cards. That's the reason. Not because they have a side income, not because they're making too much money at their day job. It's because they still have credit cards. They have some available balance on it that they can use if they need it. Guess what? As credit card delinquencies spike, that's not going to be available. Creditors are going to reduce your available credit. They're going to close accounts. They will make your life very difficult. So, that's what's happening right now. Again, I wish this was better news, but this is the news. This is what we know at this time. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.